3.2, we're going to talk about recording a payroll and payroll taxes. You have two objectives. You need to be able to journalize the payment of payroll, and you need to be able to journalize the payment of payroll taxes. So a payroll bank account. Companies typically use a special payroll checking account and a special payroll checks to pay employees. So after the payroll register is completed, a check is going to be written for the net amount of pay and then deposited into a special payroll checking account against which payroll checks are written for each employee's net pay. So what we do is we're going to figure out the total amount of net pay for all of our employees, and then we're going to write one lump sum check for all of our employees, and we're going to deposit that check into a payroll account. And then from that payroll account is what we'll write each individual check to each individual employee. After all employees cash their checks, the payroll bank account is going to have a zero balance, and therefore no special account is needed in the general ledger. So we don't keep a separate account. The reason that they do this is it just makes it easier to keep track of the payroll, and it helps for any fraud on payroll as well. Okay, automatic check deposit is depositing payroll checks directly into an employee's checking or savings account. I would especially say nowadays that's what we're going to see a lot, is that automatic check deposit. A computerized cash payment system that transfers funds without the use of checks, currency, other payment documents is called electronic funds transfer, or EFT. The use of automatic check deposit or electronic funds transfer for payroll does not change the accounting procedures for recording that payroll. We still record it the same way. It's just how they receive their money is going to be a little different. We might hear that called direct deposit as well. Some businesses actually require their employees to have direct deposit, because what it does is it simplifies things for the employer. It makes it easier for them to get the money to their employee, and they don't have to spend time writing out those checks, and it also saves them time and money, because they're not paying for checks as well, or paying for that time for an employee to write checks. All right, so journalizing our payment of a payroll. July 16th, we paid cash for bi-weekly payroll, $9,029.21. And then it gives us the total of everything. So the total of grills, furniture, administrative, and then less the deductions for employee income tax, federal, employee income tax, state, Social Security tax, Medicare tax, medical insurance, retirement plan, and then the check number. So what we're doing here is we are paying cash for this $9,029.21. So we're going to credit cash for that total amount. And then we're going to break up what the salary expense is for. So here we have salary expense grills, salary expense furniture, and then salary expense administrative. Okay, we're going to debit those accounts. And then we're going to credit all of our taxes. So we have our employee income tax payable federal, employee income tax payable state, Social Security tax payable, Medicare tax payable, medical insurance payable, and retirement plan payable. Those are all payable accounts because right now we are just holding on to them. They are a liability for us until we pay the government. This is then just showing us each individual account and what that would look like as in a T account. The payment of the payroll is journalized in the cash payments journal, and the source document for journalizing the payroll payment is the check written for net payroll. Okay, employer payroll taxes. So most employers are going to have 4 separate payroll taxes. Social Security tax, Medicare tax, unemployment tax for federal and for state. So when they look at the Social Security and Medicare, the employee pays Social Security, but also the employer. Same thing with Medicare. The employee and the employer are going to pay Medicare tax. So here they're calculating the employer payroll taxes. So notice we have Social Security earnings, and then we have our tax at 6.2%. We also have our Medicare tax. We have our FUTA earnings, and then we have our federal unemployment, state unemployment, and payroll taxes. So to explain those a little bit more, federal unemployment tax is a federal tax paid by employers to administer the unemployment program. This is commonly referred to as FUTA, federal unemployment tax. SUTA would be state unemployment tax. This is a state tax paid by employers that is used to pay benefits to unemployed workers. So state unemployment tax. Okay, so on this slide, they're showing us how we're going to calculate the employer's payroll taxes, and they actually break it up for each department. So we're going to have our grills, furniture, and administrative. So when we look at these Social Security earnings, here they've broken it down more for us in the grills department. Here are Social Security earnings. So this is what we can tax for Social Security. So we're going to take the Social Security earnings times the tax rate to get our Social Security tax. Same thing with Medicare. We're going to take our Social Security earnings times that tax rate to get our Medicare grills tax. The unemployment, so we're going to take our FUTA earnings here times the percentage for federal unemployment to get that. And then same thing, we're going to take the FUTA earnings again times our state unemployment to get that tax. We would add all of those taxes together to get our total for each department. So here they're listing the total for each department and then the total amount of payroll taxes that the employer will pay. So on July 16th, we recorded employer payroll taxes for the bi-weekly pay period ended July 16th. Taxes owed are Social Security tax $760.79, Medicare tax $177.93, federal unemployment tax $16.94, state unemployment tax $152.44. Total payroll taxes by department are grills $294.75, furniture $471.85, and administrative $341.50. So we are going to separate that by the different departments. So here what we're going to do is we're going to debit payroll taxes expense each department for the separate amounts. Okay, and then we're going to take the total for all departments of Social Security tax payable. We'll credit that. Same with Medicare tax payable, unemployment tax payable federal, and then unemployment tax payable state. Okay, here then is what it will look like when we're actually journalizing. This is going to go into our general journal because we're not actually paying cash right now. So we have our date, we have our accounts that we're debiting, memorandum number, and then we're going to have the accounts that we're crediting and their credit amounts. Okay, payment of federal income tax, Social Security tax, and Medicare tax liabilities. Employers must pay to federal, state, and local governments all payroll taxes withheld from employee earnings, as well as the employer payroll taxes. Federal and state laws govern the frequency of payments, which means that the greater the amount owed, the greater the frequency of the payment. So they're just saying the more we have to pay into the government for taxes, the more frequently, the more often we will pay those taxes. A monthly scheduled depositor must deposit the taxes by the 15th day of the next month. So on August 15th, we made a deposit using the EFTPS for payroll tax liabilities, employee federal tax, income tax, employees, employers, Social Security tax, and Medicare tax for a total of this. So what we're doing now is those were payable accounts because we owed the government. Now we're actually paying those accounts. So we're going to credit cash for the total amount, and then we're going to debit each tax that we paid. Okay, so we paid employee income tax payable federal, Social Security tax payable, and Medicare tax payable. Okay, we're also going to journalize the payment of federal and state unemployment tax liability. So this is going to be done separately. We're not going to do this in one transaction. We're going to have two separate. So we're going to credit cash because we're paying, and we're going to debit unemployment tax federal. And then we'll do that again, but this time for state. So we'll credit cash and then debit unemployment tax payable state. So they're just showing us the T accounts and what the transaction looks like. Okay, question number 1. When a payroll is journalized, which account is credited for the total net amount paid to all employees? The account credited would be our cash account. Number 2, what 4 separate payroll taxes do most employers have to pay? Most employers have to pay employer Social Security tax, employer Medicare tax, federal unemployment tax, and state unemployment tax. And number 3, how are most employers required to deposit federal payroll taxes? Most employers are required to use EFTPS, which is the Electronic Federal Tax Payment System. That was the end of 3.2. You can now go on to the 3.2 work together.